This is Maximus Analysis here for February 29th, 2016, and it looked like they were going to have a little bit of room going up today, or the bulls were going to move that much on the ES, and they faded pretty well going into the close. So what we want to see is basically them hold this 1928 area pretty much all week. Okay, we don't want them to get back below 1900, and we don't want to break of last week's low. So again, the key levels to watch overnight are 1925 and 1914. Okay, so let's see what they're going to do in the UK session, and kind of just watch it from there. So again, you look on the intraday time frame, you could see that it was they sold off pretty hard into the close. So you can see they just kept going up. Again, they were layering above highs, but broke it and never came back. So let's continue to look and see what this action is going to give us. Now, let's look at the NQ. NQ is pretty much the same thing. Again, holding these lows of 41.50 would be ideal for this. Again, they don't want to break 41.70 overnight. So again, this one looks a little bit better than the ES, but still we're not out the woods yet with these lower highs still put in place here. So you can see the lower high put in here and here. So let's continue to look at it. And again, aggressive trading is kind of what's going on currently. YM, same type of deal. Again, I would more want to see a break of this 16,400 level. Again, it's still above this previous pivot, and it doesn't have a lower high, but again, the ES to me is the one that has the most damage on it. CL, the J contract, again, it was a pretty choppy session early AM, but continues to just give you that sideways, I'm not sure where it's going to go type of movement. And again, you can just stand down if you're looking to swing trade this. A break above this 34.75 might hopefully give us some type of squeeze, and we want to see if there's volume backing that, which again, the volume increase in volume will be from one, stops getting run, so you'd have people covering their shorts, and then additional buyers as well. So that's why we want to see that increased volume over that price level. Had a couple names that don't look that good this morning. So again, I'm going to look at Amazon. Amazon is again, we want to see them hold this 545 area, 543 area, which is a 200-day moving average. But these candles are getting really small, so I really want to see where they're going to go. Okay, they had this little, I don't know if there's people that bought there. Again, I'm looking for a proper dip versus that. And got to really see, again, if they break above this high, but if they gap down low and they continue, then that's going to be something to be said. Tesla's also a name that looks kind of weakish right now, and again, it's been grinding up, and there's nothing wrong with that from these lows from the earnings. But now they're facing overhead resistance, which we've shown on last week's videos numerous times on the weekly time frame. So that is starting to, and it's starting to look a little bit overbought on the, very overbought actually on the daily. So we'll continue to watch that one. LinkedIn finally gave a sell that a break of a previous low. It's because of the sideways channel that it was in. It really it didn't even break two lows back, but again, a break of 114 with a weak close, that could definitely make things a little bit exciting, if you want to call it that. Facebook again is climbing up. It's one of the uglier patterns, quite honestly, but you trade it accordingly. So again, if you're in it, good, but it has been a pretty stinky way of going up clean versus what we showed before with this kind of nice, this is just breaking lows, chop up, chop down, gap up, gap down. Just stay away from some stuff like that. And we had Apple that actually, again, is trading in this sideways range that we could kind of see right here for a little bit, and this area right here. So it's, it's just not a really pretty pattern at all to really be trying to trade at this time. But you can see that they're getting to the top of it. They had this sell signal here a couple of days last week. They had an engulfing bar, and then they had what is called a piercing pattern, meaning that they gapped down and got over 50% of the previous bar, and they really didn't have much volume at all, and they still don't have much volume. So really want to watch that. And again, when it gets to this choppy nature, you just kind of really go to a higher time frame to kind of see what they got going on. So you can see that basically you want them to hold this 94 area in a major way and don't close below it. They close below it, they break below the 200-day moving average. You might have a lot of people start stepping in to close their long positions, even if they're long-time investors, because they've been holding for such a a long period of time from down these lows that they're like, you know what, they might have gave a lot back here, but again, if you're looking at a trend follower, they're like, it breaks below that, I'll look for where the 50 is, 50-day moving average is, and if it has crossed it already. That's pretty much it. That all I had. And the last one I'll do is linked. Is Priceline, and Priceline. Again, still holding this 200-day moving average. You see the obvious lows that you want them to hold if you're in the long already. And again, they test that. But the biggest thing, again, is that we're not out the woods yet and not getting overly bullish, because this wasn't much so far. So we thought it was going to be a nice shoot up with significant volume. And it's not breaking down, but it's definitely back to the buy signal that happened last week, I think Wednesday. So it's still in a pretty bad position, but again, a break above this high of 1968, and they could potentially see 1978 and 1985. 2000 would be a huge test, but I don't know if they're going to get there. But again, I'm watching the markets like you guys and saying, listen, just adjust your trading style accordingly based on the environment that we're in. So take care.